Hey, this is Brandon Oz with Guaranteed Rate Insurance. Wanted to share with you a quick thought on inflation and how that is affecting auto insurance. If you have noticed, which most people have, the prices of goods has been going up. This is due to the fact that inflation, or the decreased power of your money for purchasing goods, continues to go down. So as your money and the power of your money to purchase things goes down, the cost of items goes up. How does this affect your auto insurance? Well, if you've gone to a car lot recently, you'll see that there are lots of vacant spaces. Cars are in high demand, and there have been chip shortages and there have been production shortages of vehicles, which has raised the price of new vehicles. It also has had a secondary effect to where it has raised the cost of used vehicles. Because the prices of vehicles is going up, it costs more to replace those vehicles when you have an accident. There are other reasons why the cost of insurance also goes up when inflation gets high. Think about the parts that you use to repair vehicles after a crash. Those are going up because of shortages and supply demand. And because of that, the price to repair your vehicle goes up due to inflation. The service and the shipping on those vehicles' parts and repairs also goes up, which means that the insurance company you're working with has to pay more to replace or repair your vehicle. Now, we didn't see a huge spike in insurance costs for autos because there was lower driving, which meant less accidents. But as the pandemic has continued to be eased in restrictions, we have seen more and more people go back to driving normally, and we've seen an increase in claims and accidents. As that happens, the increased repair cost or replacement cost will drive prices up. Now, what do we do about it? It's very simple. There are a couple things that you can do in order to fight the inflationary impacts on auto insurance. The first thing is to look at your policy and see if maybe your deductibles need to be risen. If you have low deductibles, $100, $250, remember that the inflationary impact of your purchasing power has gone down. So maybe it's time for you to raise your insurance deductibles to $500 or even $1,000. That will help move your monthly cost down on your auto insurance. A second idea is simply this: you need to shop around your insurance, and you need to do it with an independent agent who can shop it across 30 or 40 different companies. This will allow you to make sure that the pricing that you have with your company has not, gone up too much to where it's now out of balance with where your insurance cost should be. And finally, the last thing that you want to make sure of is that you are focusing on protecting your family with the right amount of coverage for the type of vehicle you have. If you have an older vehicle, maybe it's no longer worth having full coverage on it. Or if you have a newer car, making sure the deductibles and the protections that you have are the right way, and then finding the right company to match with so that your budgetary concerns can be taken care of. There's lots of different options out there to help with pricing, and if you need help assessing your insurance and figuring out how to get things back into the right budget, you're welcome to reach out to me. Once again, I'm Brandon Ives. You can use the information below to get in contact with me, and I'll be happy to serve you. Hope you're having a wonderful day, and take care.